Bring that ass back like a boom, 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 boom.
Hey, what's up everyone? This is Supernova. You're with Boom Traders weekly overview, and happy 4th of July to everybody that's celebrating the holiday. Let's do a quick session overview. As usual, we have the risk-based model, the tactical trading environment, then current markets. I'm gonna do a summary. This video, I don't think it's gonna be that long because not much has changed since last week. Although there are some positive things that I will show you when we come up to stock setups. Some of them are actually setting up really good, and then we had some follow through on some recent breakouts. So that is a change in a positive direction. So first things first, of course, risk-based model still on negative signals since that 22nd of November last year. However, we did have several buy alerts, and we started loading up on some of the stocks. Of course, very small pilot buys, but nevertheless, there were some breakouts that were working, as I mentioned just a second ago. Of course, general market is on neutral. Up-down volume is positive. New highs, new lows still negative, and stock participation is sort of neutral. As far as our tactical trading environment, which pertains to breakouts, in essence, the things that we're trading, we're still having an all red. Although, if the current breakout situation continues to develop as it is, we might actually have to switch it to yellow. But for now, again, as I said, maximum caution is advised. Take extreme caution. You should obey the stop losses no matter what, but be very conservative in your stop loss level. Don't trade high volumes, and be patient to the best that you can, of course. So that was it for the introduction. I'm gonna go really fast through it. As I said, there's not a lot of things that have changed since last week. So without further ado, let's go into the current markets. Go into do some charts, then the notes, of course. I have only a couple of things that are new since last week, so if you want to go a little bit more in depth as to where we are in terms of the bear market comparing to history, the Fed's tightening cycles and so forth, please check out the video for the previous week. I just don't want to repeat myself with the same information, so I just want to bring something new this week in my notes. Then we're going to take a look at the industry groups. One industry group that has been really doing very good for the last 2-3 weeks has been bios. So biotech companies have been doing extremely well. We're going to see some retailers popping up. Then we're going to take a look at sentiment and do the summary as usual. So without further ado, let's take a look at the charts and some of the indicators that we're using to see what's going on beneath the surface. As far as charts are concerning, we have here my usual setup for the advanced decline and net new highs, net new lows for the 4 major indices. So let's just first take a look at right here at the S&P 500. We did not undercut the low. We basically snapped back a couple of days, Monday through Wednesday. We had negative action, but then gap down. As you can see right here on this occasion right here, we gapped down, then we filled the gap, this gap right here from Friday of the week prior. We filled the gap and then we pushed through it. Advanced decline line did not make a new low as well, so that's overall positive sign. We're still in a net new low territory, so that needs to improve, but this was some positive action right here. Well, of course, we're still in a downtrend. We still have the 50 and 200-day moving averages above us. Let me just pull up a normal chart so you can see what I mean. This is the S&P 500. So as you can see, volume was low. The yellow line here is the 50-day moving average. We have the 200-day moving average here in this purplish color, and we're still below it. The support levels that we drew here held. And now it's up to see whether we can break the sloping resistance line. And if I draw it right here, so take those, you see right here, and this coincides with the 50. So we do have some resistance right here. And of course, those gaps above are still some resistance area. But overall, as I said, it looks fairly positive given the situation we are in. Now let's take a look at Nasdaq and just grab my tool. So basically, Nasdaq is looking pretty much the same, the exact same thing right here. We gapped down here on Friday through this gap from last week, and then we filled it back up. Advanced decline line is not making new lows, basically trying to turn around higher here, which is also a positive sign. And if you're looking for trend lines and some resistance on the top, one resistance line that you can definitely draw is this one right here. We barely tapped it, but we couldn't close above it prior week. Now this is what resistance is looking like. Net new highs, net new lows still in red. And if we're looking at Nasdaq in terms of moving averages, pretty much the same thing. Of course, 50 below the 50 below the 200 days. So in general, it's a negative situation, no doubt. It's a bear market, of course, but be aware that some of the things are starting to are starting to look a little bit better. Let me put it this way: I don't wanna get your hopes up because as I said, we're still in a bear market. Anything can happen to the downside, but there are some developments that are positive the way we see them. And advanced decline line right here and on the S&P 500 is showing some progress to the upside, which is actually good. IWM, pretty much the same thing. Net new lows are still dominating the tape, but the advanced decline line is making a higher low, so that's the first sign of a bottoming situation, bottoming process. And as we've been trying to pound on the table, bottoming is a process. I mean, it doesn't happen overnight. Yes, with the example with COVID, we had this V recovery, but in general, it's a process. It takes time, and bear in mind that the macroeconomic situation is still bad. Nothing really has changed. Now we are up to see this month's number for the inflation, but as far as we are aware, still nothing really has changed. However, as I said, looking at some of the internals of some of the indicators below the surface, we are seeing some mild changes. And bear in mind, this can last for some time before we actually start reversing in a positive way. It might take a couple of months. Because, for example, we've been talking all year, last year, that the advanced decline line is not looking okay. Stocks were showing weakness, although the indices were making new highs. And as a matter of fact, let me just take you back to Nasdaq, and I'll show you what I mean. Look at that. So this is 2021. This is the advanced decline line. So right here, and that is about, as you can see, that is the 2nd of September, 21st is when the advanced decline line made the high, right here. Ever since, we've been going downwards. Now, yes, there is a very, 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 very little slope to the downwards here, but the market is making upward movements, and all the way to the 22nd of November, right here when we issued our sales signal. But by that time, the advanced decline line has already been, just put it like that, the advanced decline line has already been on a steady decline for a year. So what I'm trying to say here is, don't expect the advanced decline line to tell you, well, we're turning right now. The advanced decline line is just, how to say, it's like an indication that something is wrong with the market. And of course, the indices price can go lower and lower, but since we're seeing the advanced decline line starting to turn around, that means that stocks are actually showing some health underneath, which eventually will be reflected in price, but we have to see when. As far as the Dow Jones Industrial, the advanced decline line has been on a rise ever since the COVID crash right here. And actually, you can see right here, it's a clear uptrend. I mean, we're making higher lows. So basically, this action right here in price is not really supporting, the advanced decline line is not really supporting this price drop. But as we've talked a couple of times already, I just believe that this is due to the overall market weight on Dow Jones Industrials components, and that therefore the market, therefore Dow Jones is just dropping in price. I mean, there's just weight from the market. Now, let's go over the other internals that we are looking at, and then we're gonna go to my notes. The next thing I want to point out here is the put-call ratio. We spoke about this hike above 1, which shows extreme fear, extreme hedging, or shorting activity, and now we are back into the range. And the regular range, as I've pointed out a couple of times, should be between 0.75 and 1. This one right here was extreme, and as I've mentioned already, since the COVID crash, the general area of 0.75 to 1 has moved between 0.5 and 0.75, which shows extreme bullishness. So basically, that gives you a ratio of 2 to 1. So for every one put out there, there are 2 calls. And now we're kind of moving back into the normal pre-COVID range for the put-call ratio, which I think is very beneficial for the market in general. And definitely this spike right here with the extreme sentiment in terms of bearishness on the market showed us that we might be seeing some topping action. So pretty much that's what I want to see right here. The other thing is looking at the VIX. VIX did hit the upper part of the Bollinger Band, as well as S&P 500 making a low. Then we retrace back to the midsection, and for VIX, pretty much the same thing. Retrace to the midsection, and now it's moving below the mid, which is the 21. Of course, here is in terms of Bollinger Band. So I think overall that's a positive development for the market. Now, what we are looking here is pretty much trying to get into the highs right here, as well as the upper line of the Bollinger Band, and we'll be watching for VIX if it goes to the lower end of this Bollinger Band. But so far so good. Everything's pretty much looking all right. As far as my indicator, we are still far away from another reversal. Basically, this indicator is giving me the green to buy. I wouldn't say aggressively, because we have to keep in mind where we are in the market, what are the overall macroeconomic conditions. But I would say right now it looks like a bottom. What the indicator is saying, it looks like a bottom, and you can try some purchases. And as we will see in the stocks, we did actually have some pretty good follow through on a couple of them. As far as internal indicators, I'm going to switch to Thinkorswim, just show you a little bit more from the other indicator, and then we're going to go talk about the stocks that we're setting up and we're seeing follow through on them. So this indicator relies on advanced decline information to paint the bars, and you can see that you don't need to look at the chart. I mean, the chart is S&P, but the indicator doesn't really move. I just have S&P here for reference, but I can just as well have QQQ, and the indicator will basically show you the exact same thing. When we are touching like these oversold levels, we are expecting a bounce, a reddish extreme oversold, and you can pretty much see every single time we go here to the red or the green, we do have some bounce. And on the upper side right here, you can see we did have a move down. Right here we did have another move down. So basically right now we're in the middle, and that tells me that we have more room to go to the upside. And when I compare this with the other indicator on TradeStation, basically, as I said, I'm given a green to go further and try some longs. Now, as I said, this is the first one in my notes. Setups are starting to work. Now, there are not a lot of setups, but compared to what we've had for the last couple of weeks, and especially when you're considering playing to the long side, we did actually have some pretty good moves followed by some follow through. So it was okay for trading on the long side for the last couple of days. And I'm gonna go just over a couple of stocks to show you what I mean, guys. And we've said it a couple of times already in our videos. Go buy the stocks. I mean, we can go on in lengths in terms of presentation. What are the macroeconomic situation? What are some factors that might, you know, uh, affect the market in either direction? But at the end of the day, we're trading stocks. So if we have the setups, if there is a good enough risk to reward ratio, which is the most important part of trading, we're gonna take the setups. Yes, we might not take big positions on, but if you have the setup, you have to take it. It's as simple as that. You have to take it. If the market is right, you have to take it. If you see setups, that means that the market is somewhat right, and you have to trade. Otherwise, you always be prone to trying to figure out whether a market is right or not. Just cut this part out of the equation. The market can do whatever the heck the market wants to do, but if there are setups, you gotta take them. So, as I said, some of the trades that we took are actually working pretty well. So this one empty, you can see on Thursday setup, beautiful break of this resistance line right here. I'll just draw it for you. Right there, beautiful break of it. To the upside, stop loss right here on the moving averages. You can see the cyan right here is the 20-day, and the yellow one is the 50-day. So we have support from two moving averages. We have this resistance line right here touched a couple of times. We have extreme volume. What not to like about this setup? We take it close to 1 hour right now, so everything's okay. Here's some other things that I'm actually looking for. You can see this one, Kinsale Capital Group, setting up pretty well. If we move to the weekly chart, you will see it's like a perfect scenario to go long right here. If we break those highs, let me see if I'm on a trend line. Yep. So that looks insane. I mean, just look at the weekly. It's just gorgeous setup. Just go back to the daily. Also, I have this one, LTC, that's on the daily pretty much, and you can see I have some alerts on those. FCN, one of our moderators that actually was speaking about FCN right here. So it broke right here, 177, perfect long, followed through on Thursday and Friday. This one is one of my favorites right now, Harmony. If we can move past this left shoulder, because right now what I'm seeing is head and shoulders formation. So we have the left shoulder right here, have the head, and then I have the right shoulder right here. But if we can break this right shoulder, definitely moving past 54, I really like it. And if you look at it on the weekly, it actually looks a little bit better. We have another high right here, so that's a triple top. Break that, and it has potential to go. Other things, again, Ted noted HRB, it moved late Friday, volume showed up right here. Still not, well, actually cleared the high by just a few inches. So you can still consider that stop under the low if you trend just break out. Post, same thing. THS, you can see it's right about there to break it. This one is VRTX, it's just gorgeous looking. If we can break this high right here, again, same thing. Mark's been really strong. CL broke, traded this little breakout of this zone. Still, if you're looking at the trend line, this just looks perfect. If we can break it to the upside, right there, this just looks amazing. Other things that I'm looking at, where's my mouse? Okay, there it is. Other things that I'm looking at, low, this little consolidation right here. TCBK just broke out. See if we can get into the second mouse. NBIX, same thing. Bristol Myers broke out, pull back to the breakout zone. See if we can hold. MCK, insanely strong name. IBM, same thing. Broke out, pull back to the breakout level, second mouse. T-Mobile, ATGE, ALKS, this is another one from Ted. Vivo, you can see right there is forming some sort of a handle. UNH, very strong. UTHR, another one from Ted. Basically, gold, this is from Tin, still setting up for another leg higher. Monster Beverage right here. DG, this is another one from Ted. Lily, same thing. We have blue right here. It basically broke out. Now it's filled this gap, this little gap right here, and right now, if you can see, it is basically holding this breakout level. So this is a perfect buy right here. This zone stop below these lows right here. SGen is another one that I'm looking at. So as you can see, we do have the setups. The setups are there. Not a lot, but still quite a lot of setups. And if you're trading breakouts, I think that you would appreciate what's happening in the market right now. Now going back to the notes, I had this slide last week, but I think this is a very important slide going forward throughout the year. So just a couple of statements from Bullard. I want to move up rates to 3.5%, and front loading rate hikes is a good idea in this situation. So basically, these are stands showing statements from Bullard that the Feds are really committed to bringing down inflation. That's what you have to get out of this. We need to monitor inflation very closely to basically gauge what's the next move's gonna be. That's it. Inflation is everything the Fed is basically caring about right now, and they are in a very aggressive stance to lower inflation. And this is actually confirmed by the last statement that I have right here. Once this inflation dynamic starts to take hold, Fed could lower policy rate. So there it is. You have it. Like the entire market key is within those three statements. Just a couple of things I wanted to show you from Ned Davis Research. That's the premier research company out there for market. These are the cycles they take into consideration, like the market cycles, seasonality, presidential cycles and stuff like that. And this is for the S&P 500. As you can see right here, this is the actual S&P 500 composite through 27th of June. And you can see how it's going. And this is basically what's the composite work for S&P 500. So pretty much following very, very closely. And it's showing that we are actually bottoming in terms of cycle work. Now, we don't rely on cycle work to trade, but it's a good guide to have what history has shown us. So basically, we have the S&P 500 pretty much bottoming out here. And for the Nasdaq, we do see another leg down right here in October, but then a very strong rally, pretty much, erasing all the losses for the year. Also note, however, that in January the cycle work was pretty much not on par with it. So there are some other things going on in the market, and as I said, we don't solely rely on the cycle work for trading. But nevertheless, it's a good thing to have in as a guide what might happen. Last but not least, of course, Ukraine is still very much an issue, but as I said, as long as we have the setups, we're going to be trading them. And the good part that I've also talked about last week is that some commodity prices are dropping, like copper, lumber, oil's dropping, and those commodities were the first assets to rise in price when this whole inflation thing started going on. So them dropping right now, and especially XLE, which is the energy, energy sector ticker, XLE dropping. It's actually quite positive for the market. So far, so that XLE has been going in an direct opposite of what the general market has been doing. So XLE has been raging so far, and the market has been dropping. Now seeing XLEs dropping, that might suggest that the market is good enough for a turnaround. But of course, that's up to see. So this is what I have for my notes. Now let's move into the sentiment with the American Association of Individual Investors. Last week we saw that we hit an absolutely low of minus 41.10, and that's been the second lowest since 2 weeks prior. And this has been going since 2018. So these were like the two lowest points in terms of bulls against bears. So that means that the bears were really predominant for those 2 periods. Now we're seeing a little shove up, which is positive news. However, we're still way below the mid level. So bears are still predominant in the market. As far as CNN Fear and Greed Index, I am actually surprised. We're showing 24 right now. Last week it was also 24, and you can see for Bitcoin and crypto in general, we're still on 14. Last week was the same thing, 14. So that's extreme fear raging. Although Bitcoin is trying to push back from those 19 to 20,000 levels. Now, I might be the first one to say this, but so far on this drop, it looks like the two main cryptocurrencies. And if I'm talking about Bitcoin and Ethereum, that's pretty much I'm talking about the whole crypto sphere in general. It looks like they have found stable support at these levels. So 20,000 or aroundish for Bitcoin, and 1,000 or 1,100 for Ethereum. Seems like it's found some support. Now, of course, this also coincides with markets trying to find some support, making higher lows, as we said, in the indices. But this is just what I'm seeing. I'm not saying it's not going to go any lower. I'm not saying it's not going to explode from here on. I'm just saying what I'm seeing in the chart. Another thing I also wanted to mention that I do get quite a lot of crypto projects in my mailbox. And one thing that I'm noticing here is for the first time it started dropping, which was like a couple of months ago, Bitcoin and Ethereum started dropping. There was like this fear in crypto community, oh, again, it's dropping, stuff like that. And for me, it seemed like at that point, pretty much the crypto community was shaken up because they were not going to the moon, or they realized that the going to the moon is not going to be a smooth sailing. And the projects stopped. So there were like a couple of weeks that I did not receive any new projects in my mailbox. But for the last 2 weeks, I've seen actually projects starting to show up again, which again, something like the advanced decline line that I'm using with indices, it's showing me that there is some change in thinking, that maybe people realize that it cannot just go straight up. I mean, there's got to be some corrections and stuff like this. So people have started working again, believing in the projects, believing in crypto and stuff like that. I'm not saying anything. Don't take this as a trading advice, please. I'm just saying what I see and how I think things are panning out. So just take it as it is. Now let's take a look at the industry groups from Market Smith, and then we're going to wrap it up with the summary here. Okay, so top and bottom industry groups. Now again, we are in Market Smith. Let me just get my pen out here so I show you what we're looking at. This is the Market Smith 250 growth list, target list, and we have the additions and deletions. Now, as we've talked about several times, Market Smith Growth 250 is a curated list every week of 300 tickers. And that's not a mistake. They still keep the 250 name, but it's a 300 tickers, and they add and delete names accordingly every weekend. So what we're looking for is right here, industry name. So we only care about this column right here. These are the new names. These are the names right here, but these are the categories that are being added this week. And then we're going to take a look at the deletions right here. So the categories that are deleted this week. And we're going to see what's coming up in most cases and what's coming up in terms of deletions. And this is the way that we can basically gauge what's going on in terms of strong names and weak names. So In terms of additions for this week, we can see we have a couple of tickers. There's like 10 or 11 tickers with utility diversified. So this is a strong category that's on a rise. We also have insurance. We have right here with four companies with insurance, and we have aerospace, defense. So LMT, RTX, LHX. Some computers, software starting to pop up, but definitely the ones that are really showing up right here are the utility diversified, the insurance right here, some computers, and aerospace and defense. Now let's take a look at the deletions. In terms of deletions, very short list. Okay, we have I wouldn't say we have like some communication too, computer too, finance too, medical biotech too, transportation, ship, logistics, transportation, air freight. Not a lot to choose from. So not really any no weak groups, so to speak. Now also we can take a look at the 197 industry groups. Although we're coming up with a report later this week, so I'm just going to give you a sneak preview about that. So if we have those industry groups rated by industry rank, we have oil and gas, energy, oil. So the first 10 are pretty much oil and gas. But I'm thinking that there might be some surprises right here. As I said, biotech is really strong. So you have medical diversified, medical ethical drugs are coming up. Medical managed care is coming up right here. We have tobacco, really strong, and retail supermarkets. Mini, as I showed you in terms of stocks, gold, perfect example of that, very strong. So yeah, this is what the top industry groups look like. So let's take it to our summary, and short and sweet. The risk vest still negative, setup selective, although some are working. As I said, markets in a balanced mode so far, whether it's building out of this bottom or with just a bear market bounce up to see. Put volume sort of neutral between that zone of 0.75 and 1. As I said, volatility neutral. VIX is going lower. If we can get into 2022-3, that would be really awesome, but I don't see it happening right now. And as far as other things that are relevant to the market, we have the rates and inflation, which are pretty much tight, and the war, which is one of the causes of all those troubles. Of course, the Fed monetary policy through 2021 is the bigger issue, but nevertheless, war is important. And just as an advice, try some. Do try some of the setups. As I said, be very selective. Don't play huge volumes. Be very conservative. Not conservative. Be aggressive on the stop loss. Don't allow for huge movements. And if you're taking out, take the loss, move on, and that's it. I mean, that's just the nature of trading as business. So I hope you guys like it. I hope you find it beneficial for your trading. If you like it, please subscribe, please like. Really appreciate that. And of course, join our Boom Discord server where you can get like sneak preview of all these good trades and stuff like that. So I'll see you next weekend then. Again, happy holidays, and till later. Bye bye.